Hi there, welcome to SnR Investor, where we trade support and resistance. In this video, I will explain how you can start your investing journey with this simple and very realistic investment portfolio that consists of a diversified set of investment instruments, and how this can help you to get from here today to your financial goals 20 years later. Why you should start with a simple and robust portfolio? The reason is simple because you might be new to investing and you will feel a sense of overwhelming complexity to investing. Then you will start to procrastinate and avoid investing. So the simplest way to solve your investing procrastination is to get started. And if your portfolio is overly complicated or consists of too many elements, you will get analysis paralysis, where you could not make any meaningful investment decision. Also, by starting a simple and robust portfolio, it can help you to build up good investing habits before you add more complexity to your investments. By having a simple and robust portfolio, it can help you to minimize the probability that you will face catastrophic financial loss through a drawdown in your investment portfolio. By avoiding catastrophic financial loss, your interest in investing will not go through an up and down cycle whereby you feel a euphoric sense of satisfaction when your investment portfolio is increasing in value, but then later when the investment portfolio starts to crash or loses a huge sum of its value, and your interest in investing will start to dissipate and you will start to not be interested in investing. By minimizing the chance of catastrophic financial loss, you can help yourself to maintain a consistent level of interest in your investment. This is my personal starting selections. To develop this simple and robust portfolio, I use the idea of mixing swords and shield. So swords are your growth investments that accelerate your portfolio growth, and shield are your defensive investment whereby they protect your portfolio from major downswings and help to mitigate any potential catastrophic loss in your portfolio. So the swords that I have selected for my starting selection are SPY, QQQ, and AAPL, which is Apple. And for the shield, I've chosen B and D. So I will explain in detail more about what these individual investment instruments are about. SPY will be our first sword. So SPY is an underlying ETF, which stands for Exchange Traded Fund of the S&P 500 Index. The S&P 500 Index is a basket of top 500 US companies. What S&P 500 investment will give us is a stable and consistent long-term growth. So when you invest into the S&P 500 Index ETF by SPDR, which has a ticker SPY, these are the various holdings that you will be accumulating in bulk when you buy SPY. You will have Apple Incorporated, Microsoft Corporation, Amazon Inc., Nvidia Corporation, Alphabet, which is Google, and you have Tesla, Meta, which is Facebook, Alphabet Incorporated Class C, you have Berkshire Hathaway, and your United Health Group, which is a medical-based investment. So you will get the top companies of the US when you buy the SPY ETF. So this is providing you with a diversified set of instruments straight off when you just buy the index fund SPY. When you are a beginning new investor, what you want is to remove complexity of decision making. So avoiding selecting just individual company to make up a portfolio can provide you with great benefits. So instead of trying to analyze and select individual companies, you buy the basket of the top companies, which makes it easier for your decision making. The next one on our selection of portfolio is QQQ. QQQ is another sword, as it can provide you with accelerated growth of your portfolio. So QQQ is a ticker that is for the fund of the Nasdaq 100 index run by Investco. So when you buy QQQ, you are buying a basket of the top 100 technology companies in the Nasdaq exchange. So this includes Apple again, Microsoft, Amazon, Nvidia, Facebook, Tesla, Broadcom, Alphabet, and PepsiCo. So when we buy QQQ, we are looking for it to help to accelerate our portfolio growth with the higher growth of technology companies. And last but not least, we need a shield as well to protect us from any adverse events or potential bad market downtrend. So I will recommend the Total Bond Market Index Fund by Vanguard. So the ticker is BND. So this is an bond index fund. So the bond market is the market of borrowing and lending activities, whereby the investment into bonds provides you with the interest returns of the underlying bond asset. It's known for traditionally low percent change in price. So this price variation is relatively stable. So you can see that even though it's in a negative downtrend over since 2010 to 2020, it has only reduced by 5% and it has stayed pretty much range bound throughout this past decade. And also it will provide you with consistent dividend yield, which is not reflected in its market price. If you add the dividend yield on top of the market price, this will overall give you a very stable net positive return in the long run. Also, this helps to buffer bad market conditions within the portfolio. So last of all, I will suggest you to have another swap-based investment, which is based on your own personal choice, and have fun with this. The important thing of choosing your own investment vehicle to invest in is to just learn and experience investing by owning your own favorite company. So here I have given a good example, Apple, AAPL ticker. So this is the stock for the Apple company that produces all our favorite iPhones and MacBook. And a starting portfolio allocation that I will recommend to keep things simple is to just allocate 25% to each of the different investment instruments mentioned in this video. So just put 25% of your available capital into SPY, QQQ, BND, and AAPL, and this will provide you with a simple and robust starting portfolio. So as you grow your portfolio, you will have to think of various considerations. You might want to think of reallocation, whereby you reallocate a portion of the better performing asset into the cheaper asset. You might also consider to add new assets as well, or to add new investment categories, such as commodities, where you can add gold and silver, or cryptocurrency, whereby you can add Bitcoin, Ethereum, or you can even choose different categories such as the real estate investment trust, REITs for short, that can provide you with real estate returns in the investment market. REITs can give you about 3 to 4% of annual returns, and the more leveraged or speculative REITs can give you up to 7 or 8% returns and higher. If you want to start your simple and robust portfolio, you will have to ask yourself this question: when is a good time to accumulate your investment? In SNR Investor, we will advise you to learn the SnR-way, whereby you can learn how to dollar cost average into an investment rather than putting all your eggs into one basket at a single point in time, and also how you can draw your own support and resistance to set boundaries for buying and selling your investments. And if you want to learn more on how to apply, here is our constantly being updated tutorial playlist. So you can check out in the description below the SNR Investor Essential Tutorials playlist. We have reached the end of this video. So if you like what you have heard, please give this video a like and subscribe to receive future updates. So learn more at SNR Investor. Thank you and goodbye.